Yo, what is up, everyone? My name is Dom, and we're here to talk about unusual options activity. All right, let's kick it off with a disclaimer here. Disclaimer, this video is for educational purposes only. The statements made in this program are solely the opinion of the show and are not specific inducement to make an investment. One must perform their own due diligence and realize that all investments carry risk. There's no guarantee of profit. All right, everyone. First one I want to bring up is Disney. Now, there's some nice volume in these March 26th, March 26th, 190, and these March 26th, 192.5 strike calls. So y'all know whenever I see some nice volume and we're able to pick that up in the scans, I always come down to the time and sales here and check out what's going on. Now, if you come down here, forget about those March 26 calls people are buying. It looks like people are coming in here and they're shorting puts. Now, when somebody is shorting a put, that is extremely bullish. So, you know, when someone is shorting a put, for instance, right here, it looks like somebody is shorting this January 2022 170 put. And when someone shorts a put, they're liable to buy the stock at the strike price no matter how low the stock goes. So if the stock goes to $100 tomorrow and this person shorted a 170 put, they're liable to buy the stock at 100, or they're liable to have to buy the stock at 170 even though the stock is at 100. So, you know, there's some serious risk, you know, with shorting a put, because if the stock tanks, you know, you're liable to buy the stock at the strike price. So, you know, this person is saying that they're happy buying the stock at 170, you know, if it goes below 170 between now and January 2022. And they shorted a lot of these puts. 500 puts. That's about a 50,000 share equivalent. So, you know, they're liable, they're on the hook for buying, you know, 50,000 shares of Disney, you know, at $170, no matter, you know, what the strike price, or no matter what the stock price is. And mind you, the stock has to be below 170 for them to have the chance to get put the stock for $170. So that's kind of a little confusing to explain there. You know, if you guys have any questions about, you know, shorting puts and stuff, down below. I think that's the first time I brought it up on the channel. But yeah, you know, I'm just starting to get a little more advanced with this stuff. You know, I know some of you guys have been watching for a little while, so we're just kind of turning up the heat a little bit here. So yeah, you know, it looks like somebody else is, you know, coming in here and shorting these January 2022 150 strike puts. You know, if you analyze some of these other put trades here, you know, it looks like somebody is shorting the May 200 and they're buying the 195 strike. So they're shorting a vertical spread. Yesterday we talked about buying a vertical spread. When you buy one strike, when you buy a lower strike and sell a higher strike against it, this person is shorting a put spread. So they're shorting a higher strike and they're buying back a lower strike to cap off those losses there. So yeah, you know, this is kind of a little bit of a difficult subject. I would highly recommend learning buying options first and then, you know, move over to shorting options. So let's check out the chart here. But, you know, just always remember that when you see people shorting puts or selling to open puts, that is extremely bullish. So yeah, you know, Disney stock, you know, was at about 200 bucks. You know, it's had kind of a nice pullback here. It's almost pulled back about 20 points here. It's trading at about 184. So I like this stock. This is a reopening play. You know, they got Disney Plus going. Very good management team. So, you know, I like this stock, and I saw these trades after the close. So, you know, I think I'm going to be putting on a stock position in Disney if the stock trades down tomorrow. So, next one I want to talk about is Boeing. Now, this is a short-term spread here. Now, there was people coming in. There was 81,000 contracts of the March 26 250 strike call. They started buying these things first thing in the morning. You know, I was able to pick that up in the scans, you know, first thing in the morning, and, you know, I jumped in, and, you know, this trade has been a loser so far. You know, that's why I say, you know, these trades don't always work out. You know, Boeing opened at about $143, and it closed at about $240. Or yeah, $240. You know, the high of the day was about 248, and it closed at about 239. So, you know, I probably got in these ones, you know, probably around 245, 246. So, you know, we do have a loss in these ones, you know, and with these short-term options, you know, if the stock doesn't move in the direction you want it to, pretty much right away, you know, you're going to be taking a loss here. So that's why I decided to do a vertical spread here. So I bought the March 26, 247.5 strike call, and I sold the 252.5 strike call. I think I paid about $170 for that spread. And remember, the strike width there is 252.5 minus 247.5, so it's a $5 wide strike. I paid about $170 for it, for something that can go to $500. So I like that risk reward. Trade hasn't really worked out yet. We have probably about a 50% loss right now. But like what I said, this is a short-term option that expires this Friday. So the stock turned around on us midday, and we're gonna probably, we'll see what happens with this one, everyone. But just wanted to let you guys know that there was some buying in Boeing, some extremely short-term flyer, cheap options. So yeah, Boeing. I think Boeing's maximum high is about 446. Now it's trading at about 239. So not really too much to say about this one. This isn't really an investment opportunity here. This really short-term option. I just saw a lot of people jumping in, a lot of people buying. So I just kind of took a flyer, and I'm happy I did the vertical spread because it cut down my cost basis on the trade. We're only taking a smaller loss versus just outright buying the straight call. So I do like vertical spreads. Yeah. So. Those are the two for this video. Thanks to everyone who's been subscribing. I really appreciate it. Make sure to keep the subscribing up, and we'll see you in the next one, everyone.